Happy Monday, metalheads. This is Brad back with your No Bull Precious Metals Report. Today is Monday, July 26th, 2021, and we have one of those big important weeks for you. First, I just want to say if you're existing or living in any place that isn't my next door neighbor, be prepared. Make sure that your banana hammocks are all cleaned and pressed, your AC is tuned up and charged, and you have a big frosty jug of cold drinks next to you, because the forecast is saying it is supposed to be really freaking hot. Being prepared allows you to watch with envy as the Fed decides to report on such notables as durable goods, housing sales, housing vacancies, the Consumer Confidence Index, a whole slew of different reports. And that's before Chairman Powell and his merry band of bankers decides to release upon us the new numbers for inflation and interest, and then, of course, get up on the stage and give a press conference about it, which we all remember what happened a few weeks ago when that exact same thing played out. Most analysts aren't expecting too much out of this. They're expecting pretty much the markets to stay flat. We already kind of know where things are going. You know, like all analysts, they're going to hedge their bets. They're going to look at things, and it may go up, it may go down. You know, that they tend to spread the love around on whatever gloom and doom scenario they can find. We'll have to see where that goes. Anyway, let's jump into the numbers. Right now on the big board, as we can see, it's mostly green, but we are seeing some notable soft spots. The Dow is currently down. The S&P is currently down. The Nasdaq's currently down, all of which are under 0.2%. So it's nothing significant. But the Russell small caps, they're actually up by over 1%, which is always interesting, just because of the way that these things tend to move. You normally don't see the Russell moving in the same way as really the other three indices, because they do cover different components of the markets and things like that. Moving to energy, we can see that today's a pretty good day for energy if you've got any oil futures or anything else. If you're in natural gas, obviously not. That's down by 0.7%, but everything else is looking up. However, that doesn't necessarily, that's kind of a double-sided sword. Is that, we can look at this from a pure investment standpoint and say, yeah, this is great, energy's up. But eventually that's going to make it to the pumps, and that also translates into larger costs, things like that. Same as anything within futures, is that there's the financial component, but there's also the significant final product component, things like that really tend to drive a lot of this stuff, and really, it can affect the common person. So it's always looking at from a grain of salt. Speaking of grains, we can see that they're mostly down, which is another big component. And then moving into metals, palladium's up pretty good, over 1%. Copper is kicking butt at 4.23% up, for a price of $4.58 a pound. Platinum is up pretty decently at 0.41%. Silver, however, is down right now to negative 0.03%. So silver has been kind of laying flat, but we'll look at that in a second. Gold is also down today. It broke it broke the 1800, and it's down at 1797.40, which is an area of support for gold. So analysts are predicting that if it tends to decline past that point, that it's possible that gold could see some larger decreases. That remains to be seen. I've never taken too much of the technical analysis to heart, but we'll see how it goes. That's where it is. There. And today is the new home sales. And the first thing I want to bring up, because obviously the number actually isn't in there, but we can see that the current report that came out at 10:13 a.m. this morning, sales of new homes slumped to the lowest level since start of pandemic. High cost and low selection are to blame. So, of course, whenever you have a supply shortage, you're going to see that eventually fall off. New home sales dropped 6.6% to an annual rate of 676,000. The government said Monday. This is how many homes would be sold in a year if the same number were bought in each month as they were in June. Now, if we look at this, the previous was 800,000, and the median forecast was 795,000. So that's a pretty healthy decrease. That's one that I'm expecting is going to start to ripple through, because that's a definite softening, especially of the new homes and things like that. And it's just a larger indicator of what's going on with the markets and the supply lines and supply chains and manufacturing and all of this stuff that I harp on a daily basis. So looking at that, as we go into Tuesday, tomorrow we can expect, durable goods, non-defense capital goods orders, excluding aircraft. So if you were hoping for the aircraft number, you're going to have to wait a little bit longer. The S&P Case-Shiller Home Price Index, that'll be another kind of driver on this. The Consumer Confidence Index, and housing vacancies for Q2. Housing vacancies, whether you realize it or not, are a huge economic driver right now, because with all the pandemic remediations that we had, the eviction moratoriums, the rent issues, things like that, we're facing a significant housing crisis that's coming up that no one is really talking too much about yet. So watching this housing vacancy number, there are a lot of economists who are watching it, as are, a lot of investors and a lot of other things. So that could actually spill into market movement. Now, moving into Wednesday, and at 2 p.m., we have the Federal Open Market Committee announcement, which is going to be the interest rates and inflation numbers. And then at 2:30, we have Fed Chair Jerome Powell is giving a press conference. So that's why I talked about in the intro. And we have to watch that, because generally that's something that has a very big effect on the markets and where they show up and everything else. On the 10-year, we can see a few different things. We ended the week last week at 1.29%, and this week again, we're starting that decline. This is something that's very challenging. We're at 1.26. There's a 3 bip spread, and you can see that decline. You can see how the numbers are basically moving through here. It's just a weird trend line that we've got going on for this 10-year number. We just have to keep watching this. So up on the screen right now is the silver market sentiment, and I wanted to bring this up. I don't believe that I covered it last week, but this is the report that I pull on a weekly basis that indicates where everything is actually showing up. And where the big players, the whales in the industry, are actually sticking their money. And this is divided amongst basically net longs and net shorts. So I take a look at all of the positions, aggregate those, look at how much of a percentage they're in on a long position, how much they're in on a short position, and then do a net value on it to see exactly where they kind of stand, and then trace that across the timeline so I can see changes over time. And then I define the sentiment number, which is an algorithm that I created that's slightly weighted just to kind of give a little bit more accentuation to where things are moving. And then the green line is the average of that sentiment number. So based off of this, it allows me to kind of see where are most of the big guys putting their money. So by that, we can kind of define the market. Where does the market lie? Where's demand and supply lie? And from that, we can kind of, suss out where we expect that the price can go based off of supply and demand. And one of the things that we can see is that net speculators are negative 34.6 right now. Net funds, or net longs, are 24.7. Now, there's a differential on that. The sentiment index is negative 11.74. So there's definitely more sellers than there are buyers at this point. And there's a contraction generally amongst these two. Now, if both of these numbers reach zero, it doesn't mean that there's zero of anything. It just means that they're evenly balanced. This just provides us a trend of where we can start looking at things. And these are major positions that incorporate probably around 92 to 93% of the entire spot market. So when we're evaluating spot price, that's where these positions come in, and that's where we see it, and that's why this is relevant. But likewise, looking at gold sentiment, we can see that there is a certain expansion that's occurring here. The numbers are similar, although they're larger. We have net longs at 39.9 and net shorts at 46.6 with a sentiment of negative 11.5. So it's definitely skewed towards the sales end of things, and that's kind of where we've been. So there's definitely balance between these two groups that we're seeing kind of similar numbers across, which definitely indicates a lot of the resiliency of gold. We haven't seen a lot of narrowing or expansion or anything like that within these numbers, these positions. So everyone's just kind of riding the way that they are. There was a slight contraction that occurred, back in March, but for the most part, we've operated at pretty much the same levels. So, looking at the silver market, we can see some interesting activity that's occurred over the last few hours. So, I'll bring this up from late last night when the market opened at 6 all the way through. And we can see that as we start tracing this through, that the number kind of decreased below, but then it started popping up quite a bit. So we're in the middle of the night, 1 o'clock in the morning. Things are going up. We had that slight dive around 2:15, and then start popping up again. And we popped up until really it was right at almost the 8 o'clock hour when the American markets came in. But you can see that even on this 5-day VWAP, it's a tight VWAP. It's not an expanding one. The volume isn't really significant where it's pushing this out. We're not seeing the price ranges they're pushing out, anything like that. We're seeing a very kind of a tight movement within there. So even though the price is increasing, we're not seeing that volume that's also increasing that indicates that there's some sort of concerted push behind it. And right now, as we apply like a couple of the other VWAPs, we can see that we did have a slight volume just to shift that previous day VWAP up, but that's right almost at that +2 mark on the 5-day. And then we look at the intraday. The intraday ends at about the same place. So everything is really kind of aligning right around that, that 25, 35-ish range. So it wouldn't surprise me if this motion remains, if we still see kind of that same push towards that point. But it depends. Right now, I mean, I'm seeing that silver is, even while I've been talking, it's up 25.29. So it really hasn't moved significantly, but it is actually in slightly green territory since I did the big board. Looking at gold. Gold has had that an interesting run so far. So let me zoom in again, like I did with silver. Let's look at what's happened over the last 10 hours or whatever it happens to be. So from last night at 6 o'clock, we were kind of running right around that 1800 mark. We did dip below. We got into the 1799s, and then all of a sudden it pushed up, and it pushed up beginning really at 2110. It got all the way up as we started getting into the 10 o'clock hour. It was really riding high above this +2 mark. We had slight dips where we hit that +1 mark in the middle of the night, but it wasn't until really, again, the 8 o'clock hour when the American markets woke up that we started seeing that decline. And now we're really definitely pushing down. As you can see, we've traversed all the way from really the +2 all the way down to the -2. So we've definitely crossed all of the bands, and statistically, that's a lot of data. I mean, that's 2 standard deviations on either side of the mean, which if you want to start looking into, central tendency theory, that's a lot of data points. We want to look not necessarily just at the price, we want to look at the volume. The VWAP hasn't changed. We've had very straight lines. They're roughly parallel all the way through. So we haven't seen expansion in volume. So a lot of this is pure price action. It's not volume action as well. So that factors into a lot of what's going on. Is this price actually going to hold out? That's a great question. And the best that we can say is that gold seems to have significant resiliency, and I'll even say above 1796. We haven't really seen too much price action over the last several days that wants to go down. Right now, gold seems to be pretty content hanging between the 1800 to probably like the 1810, 1815 mark. So unless there's something coming up that I'm unaware of, I don't know how much that's really going to change. As I've always said, I'm wrong as much as I'm right. So, do your own analysis and see where it comes out. Our favorite gold-silver ratio. Well, right now the market-to-market gold-silver ratio is sitting at 71:17. So 71 little round ounces of silver will possibly purchase you one little round ounce of gold. Now, if you're doing this not based purely off of the spot market, but if you're doing this on the actual retail to retail market and you find someone to go along with it, you could get, 62.69 of your generic silver rounds would purchase one generic gold round at an average price. So that calculates with premiums and everything else and where they're average selling at. Again, these aren't great numbers. It's hard to get excited about it, but the more you know about what these exchange rates are, the better. And here we are with retail silver. This should not surprise anyone. We are still seeing declines. This week we are seeing this more radically declined. So we have these steps that go through. 2 weeks ago, we were in a better position, but it's not surprising. Silver's been repressed for about 2 weeks or so. So we shouldn't expect anything that's coming up. Everything on average right now, except for the 10-ounce silver bar, is trading per ounce over $30. So if you're getting it for say $30, if all of a sudden you go into your local coin shop, you pick one up and they're charging you, 30 an ounce or 30.05 an ounce or whatever it happens to be, you're getting a fair deal. It's not that bad. If you're buying like a Silver Eagle or something like that, the averages on the Silver Eagle, just because of the distribution of these things, are insane. Generally, if you get it for less than 40.79, you're getting it below average. Average being a very subjective term. Retail gold, we're seeing our first major decrease in price that we've seen in quite a long time. Even the Gold Eagle, the 10th ounce at 26.97, that's decreased from last week's 27.21. You're still paying way too much for it, but at least you're not paying quite as much as you really would have, I guess. Going into, say, the 1 ounce gold, the generic gold, 1892, broken that 1900 mark on the other side. The pandas are still over 1900. So are the kangaroos, the Cougarans, the Philharmonics, the Maple Leafs. So everything's pretty much still over except for generic has gotten underneath. You look at the gold buffalo, still over 2000. We're at 2005. The gold eagle, 1965. So you've still got some premium prices going on. It's still significantly above spot. Gold has a significant premium to it. It is what it is. You just have to kind of deal with that. But the bigger quantity that you purchase, the better deal that you can get off of it. So that's going to do it for today. We've gone through a lot. We've seen that there are some changes, and so hopefully you can use that information, make some good decisions out of it. Again, just a reminder, if you like what I'm doing, be sure to share, subscribe, give a like on the video, leave me a comment. But until next time, happy stacking.